My name is Alisa Safina Wihda binti Muhammad Fairul and my student number is 2023-234-274.
My name is Nura Fifa Humaira binti Muhammad Hafiz. My ID number is 2023-856648.
My name is Sharifah Nushaira binti Syed Rosli and my ID student is 2023874082.
My name is Nur Nazira binti Muhammad Yusuf, matrix number 2022480282.
Today I'm going to explain what is SME. According to the European Commission, small and medium-sized enterprises, commonly known as SMEs, are businesses that employ fewer than 250 employees and operate with limited turnover or assets. Despite their relatively smaller size, SMEs plays an important role in the economy. They represent the majority of businesses and contribute significantly to economic growth and employment creation. Through their operation, SMEs help reduce unemployment and support long-term economic development. In this case study, the article examines how small and medium-sized enterprises evaluate their investment decisions. Rather than focusing on financial ratios, the article highlights the importance of capital budgeting techniques in determining whether an investment project is financially viable and sustainable in the long run. First, capital budgeting techniques are used to decide whether an investment should be accepted or rejected. According to the article, SMEs commonly apply capital budgeting methods to evaluate future cash flows, recover its costs and financial risks. The most important technique discussed are payback period, which is most commonly used, profitability index, net present value, and internal rate of return. These techniques help ensure that limited financial resources are allocated to projects that support business survival and growth. Next, the article identifies that payback period as the most widely used capital budgeting techniques among SMEs. The payback period measures how long it takes for an investment to recover its initial cost. SMEs prefer this method because it is simple, easy to understand, and focus on liquidity. This reflects SMEs' concern for cash flow stability and their need to minimize financial risk. Another key indicator discussed in the article is the cost of capital. The cost of capital represents the minimum return required for an investment to be considered acceptable. The article explained that SMEs mostly estimate the cost of capital using historical returns on past investment rather than advanced financial models. This approach allows SMEs to make practical investment decisions and face difficulties despite limited market data and financial resources. In conclusion, these financial tools help SMEs evaluate investment feasibility, manage risk, and support long-term business sustainability.
So we move to the next part, which is capital budget technique. In Serbia, they use these 7 main techniques, which are payback period (PP), net present value (NPV), internal rate of return (IRR), profitability index (PI), accounting rate of return (ARR), discounted payback period (DPP), and lastly, sensitivity analysis (SA). Based on the 7 techniques listed, what is the most frequently used? Referring to these bar charts, it shows that the highest usage of technique is payback period (PP). On average, 68.8% of MSMEs always or often use the payback criteria when evaluating investment projects. What is payback period? Payback period measures how long it takes for an investment to recover its initial cost from expected cash inflow. It does not consider the time value of money. Are you guys curious why is Siberian SMEs prefer to use payback period? There are 2 reasons. First, simplicity and ease of use. And second, there is no need for discovery.
There is several limitations, constraints, and weakness. One of them is limited financial knowledge, cash flow forecasting problems, risk of property incorporated, over-reliance on payback period, limited resource, weak regulatory and institutional support, difficult estimating cost of capital, technology constraints, and resistance to change.
Continue with the cost of capital determination method. There are 5 methods that are historical return on investment, regulatory decision, discounted dividend (DDM), historical returns on common stocks, and capital asset pricing method CAPM. The result shows that the SMEs company in Serbia are most inclined to determine the cost of capital following historical returns on investments for about 60% of the respondents. The regulatory decision is the second most common method used by the Serbian SMEs company for about 15% average, while the CAPM adoption is rather rare with average 8% due to inefficiencies of market data and financial training.
In conclusion, SMEs contribute economic growth but often rely on simple tools like payback period due to limited resources and knowledge. They also face challenges in estimating the rise of capital, leading them to use basic methods such as historical returns and regulatory decisions. These factors shape how SMEs make their investment decisions.